June 30th, 2026, and the tape closed Q2 the right way. Tech is leading, defensives are fading, and volatility just compressed hard. The S&P 500 and the Nasdaq are on track for their best quarter since 2020 per Reuters this morning, and today's session is a clean exclamation point on that story. The question now is whether this is a confirmed breakout or a quarter-end positioning flush. Let's get into it. SPY closed at 746, up about 0.8%. QQQ closed at 736, up 1.7%. Tech is clearly outpacing the broad market. That's the right relationship for a sustained risk on tape. Both indices sit above their 20-day, 50-day, and 200-day moving averages. Structurally, the uptrend is intact. Here's the continuity thread that ties this week together. 2 sessions ago, we called the prior bearish thesis invalidated after QQQ cleared the 721 to 726 resistance zone that had held for multiple sessions. Yesterday, we flagged the setup as neutral with a constructive lean and said the thesis shifts bullish if SPY closes above its 20-day. Today, SPY is at 746, above the 20-day at 741, and QQQ has moved to 736, well clear of that old resistance. The evolution from bearish to neutral to conditionally bullish has followed the price action cleanly. On volatility, the VIX dropped nearly 7% to 16.44, now below its 20-day, 50-day, and 200-day moving averages. That's a volatility compression signal. 5 days ago, the VIX 5-day return was negative 15.6%. The market has been pricing out fear steadily through the back half of June. The sector rotation is textbook risk on, technology up nearly 3%, industrials up 1.4%. Meanwhile, consumer staples, utilities, and healthcare all fell more than 1.25%. When defensives sell off together on a day, tech rips, that's investors rotating out of safety and into growth. Exactly what you want to see. The overnight backdrop was supportive. South Korea's EWY gained 2.23%. That's notable given the semiconductor sector's global footprint. Europe was modestly higher. Crude oil fell about 1% to $70, consistent with the steep quarterly losses Reuters flagged, while gold was essentially flat. The dollar index is at 101.1, nearly unchanged on the day. The underlying uptrend is intact, with RSI at about 66, but the pause in dollar strength today was a mild tailwind for equities. Here are the levels I'm watching. For SPY, all week the 20-day was the overhead resistance we kept pointing to, and today SPY finally closed above it at 746. That's the reclaim we've been waiting for, and it flips the 20-day, now near 741, from resistance into the first support. The next hurdle is the one we flagged yesterday, 747.60. Today's high of 748 tagged it but couldn't close above. Touched, not cleared. So 747.60 is the line that decides the next leg, and 729, the support that's held all week, sits below. The projection is essentially flat, right at resistance. No conviction yet, a tape pausing under the level it needs to break. For QQQ, resistance at 743 to 747 is the next test. One signal in the data leans toward QQQ, pushing towards 742, consistent with the structural read. The base case, conditionally bullish. The conditions are SPY closing above 747.60 on above average volume, QQQ testing and holding the 743 to 747 zone, and VIX sustaining below 17. The risk scenario, SPY rejects at resistance and fades towards 729, VIX reverses above 19. No earnings are scheduled in the next 7 days, so the tape trades on momentum and any macro or geopolitical developments. That's the read for the close of Q2. That is today's market brief. This is market analysis for educational purposes only, not financial advice. If this breakdown helped, hit the like button, subscribe for the daily market brief, and check back tomorrow after the market close for the next update.